Welcome to the Counting Capital Podcast, presented by Buchanan Street Partners. For informational purposes only and not to be relied on in any manner as legal, business, financial, tax, or investment advice, nothing in this episode is an offer to sell or the solicitation of an offer to buy securities. Join our host, Buchanan Street Chairman Robert Brunswick.
Hello, my name is Robert Brunswick, and I'm chairman of Buchanan Street Partners, a real estate investment management firm, and I'd like to welcome you to Counting Capital, a podcast we created on behalf of our clients, their families, registered investment advisors, and lifelong learners at large, to educate them about real estate investing, investing more broadly, and some specific industries. Today, it's a great treat for me to welcome a good friend and a significant contributor in the real estate space, Edward Cook of McCarthy & Cook. Edward, great to have you on the program.
Great to be
I know we're
here.
going to have some fun today.
Absolutely, always with you.
Let's get started. I was thinking about, for our listeners, it's always helpful to understand backgrounds. Why do you think the way you do? So talk about your 30-plus year career in real estate, where you got educated, kind of the path along the way.
So real estate for me always started with a notion that I wanted to be in a durable income producing stream. So I wanted to be in commercial real estate. So I went to University of Utah for 2 years, and then I had a vision to go to USC because they had an exceptional real estate program and finance program. And people like Rocky Tarantello, I'm sure you've heard that name.
Sure.
Guzward and others were there that literally lit my world on fire. I started working during school, so I worked for the chief appraiser of First Interstate while I was in school, and worked all 2 years almost while I was there at USC. And from there, I got probably the best background. I have a lot of respect for MAI and the Appraisal Institute because I appraised shopping centers and hotels and marinas and office buildings. And I'll still never forget the worst office market in American history is not Houston in 1984, but was San Jose, 48% vacant. As far as the eye could see, tilt-up buildings with clear story windows vacant.
So Edward, is this during the RTC time?
Yes.
Okay,
right,
Resolution
RTC.
Trust Corporation,
Yes.
late 80s, early 90s.
That's
You
right.
were appraising properties.
That's right.
As a young man, learning the business and understanding how values are created or lost.
That's correct.
Excellent.
Yes. So from USC, I was very fortunate. I snuck into an MBA presentation as an undergrad and met the president of McGuire Thomas Partners, which was a big developer in downtown LA. And the remarkable thing was no one was sitting with him at the end of his keynote speech. And so, of course, I parked right next to him. And next thing you know, I was working for McGuire for almost 2 years, year and a half.
So this is Rob McGuire himself you parked next to?
Rob McGuire. Yeah.
Got it.
No, this was Ned Fox, who was the president of McGuire Thomas at the time.
Got it, okay.
And so I had a great run, and I was elevated to a program where MBAs were recruited from top schools, but I decided that I wanted to polish my education, so I went, and I was only going to go to an East Coast school just for various reasons, exposure and otherwise, and found myself at Wharton, where I got another real estate major, a finance major, and an entrepreneurial management major. So I was fortunate to wave out of a lot of classes, and I came one course short of 3 majors, which was cool. And I also worked. I was the only person, actually, you were not allowed technically to work. I worked through business school, which was pretty crazy, almost full time. When I came out of there, I had lots of offers on Wall Street, but I actually went back to my knitting and stayed at McGuire Thomas Partners. And it actually turned to be a very good thing. It became a very dysfunctional place as we ended up in the Great Depression of real estate. And I call it that. The second Great Depression in real estate was 1990 to 1995. We were very fortunate that we were sitting in an ivory tower, 1 million square foot assets at a clip with basically our cash flow was $50 million in management fees. It was massive because they're massive assets, but they were losing value like you can't.
So these are asset management fees, not necessarily property management
No,
fees?
these are property management
Property
fees.
management fees,
Like
okay.
keeping the company going. Sure. So it turned out to be an amazing place to be because we got to, we were weathering when the Trammell Crows and others were blowing up, and the partnerships were blowing up because of the excess building in that time. We were weathering it, but our big comeuppance was coming, and fortunately, we were regentrifying ourselves and trying to figure out what we were going to do. I was part of the vision committee. There was an alligator committee that my partner ran. I was on the vision committee, and there was an operational committee. And it's a fun story because there's 3 elements to this. The operating story was spending all their time converting McGuire Thomas Partners to Apple computers. The alligator committee was responsible for restructuring $4.2 billion in debt, including having swapped, and this is for the future and for the past, swapped all our debt at 10.2%. And it literally.
So this is the alligator committee. Sorry, the Apple reinvention was the
operating committee.
Operating, then alligator, and the third was?
The third was the vision committee.
Vision committee, okay.
Yeah. And so I was part of that, and we were very fortunate to have a gentleman running around who was $2,500 an hour from Arthur Andersen Consultants. And I'll never forget him because he's probably the most valuable guy in my career, and not for the reasons you might think. He ran around and basically said, everything we know is turned upside down. The internet is nascent. This is 1995, 1994, and is dial-up. You know, you can hear the modem click in, and you get online. And basically, he'd run around, give speeches, and say, everything you know about real estate is going to change. And basically walked through our offices and said, you're all working in a buggy whip business called office. And this is going to be very important, I'm sure, for the later conversations we'll have. And then one day he gave his penultimate speech, which was, when was the last time you ever went to a shopping center? He said they were dead as well. I thought, well, I just got married and I just came from Newport Center, Fashion Island, and enjoyed a movie and walked around and did a little window shopping. And I thought, I got more and more agitated with this guy because everything he said was so definitive and seemingly so intellectually devoid of reality that moment, that day, he became one of my favorite equations, one of the most powerful and simple equations on earth. It's called the inverse equation, 1 over x. I still can see his face, and it's still 1 over x printed right on his forehead. Everything he said, I did the opposite. And I'd smile every day he came in. He'd walk by my office, and he'd always have some grumbling words about wondering what I'm doing. And I said, talk to me. Tell me what you're thinking, because everything he thought, I did the opposite.
So I want to stop you for a second, because I'm thinking about mentors and how important mentors are to all of us. He was always a reverse mentor of sorts. But so we talked about college. We talked about McGuire Thomas early. We then came back to McGuire Thomas, and then you really, and we'll get to in a bit here, but I want to ask you other questions, starting McCarthy Cook. So you've really been at McGuire Thomas and McCarthy Cook your whole business career.
35 years.
Right.
Yes.
Which is old school. I mean, kids today or students today or younger people today, might have more stops on their journey, but you've been very focused. But part of that is your move to entrepreneurship. But as you reflect on your earlier years and where you are today, if you were to think about your skill sets that lined up ideally for the real estate space, what does Edward Cook bring to bear from a talent and skill set and aptitude standpoint that has made you so successful in your business career?
So I was a B or a C math student.
B or C math student, okay.
And but I had a pretty good gift of gab, and I liked marketing. And so I spent all my time and focus on becoming the best I could be, and I became a finance guy. I became a finance analyst and worked on the most complicated finance stuff we had, and realized once the numbers were applicable and it was applied mathematics, I was actually exceptional with it. I feel like I wasn't taught well. I needed the Singapore method when I got the American method that didn't work. So I took my weakness and made it my absolute strength, and then had all the rest of my things to play with, which was design skills and marketing skills and organization skills and detail orientation.
But I could argue that those could be applicable to lots of industry. So what particularly made those applicable to real estate for you?
Only because I had an early vision, income producing real estate. It was in my DNA growing up, working for real estate families, and so real estate was always there, but it could have been. I had 10 business plans coming out of business school. Right. One was the electric car. I was going to disintermediate the internal combustion engine. 2, I was going to do electronic readers, books, essentially electronic books.
My gosh.
3, flat screen TV. And I was going to reinvent the toilet to make it more water efficient. I had 10 business plans like that. About 6 of them became legendary.
I was going to say
business
3
plans.
out of those 4 would have been home runs for sure.
So I was Tesla number 995 buyer because Musk did it.
So, a lot of my guests, next to their name would be disruptors. So what you've described is your disruptive nature and your willingness to think outside the box and to challenge conventionality. So we're going to talk more about that as we think about, what's going on in your space today. And I say that disruptive.
I'm a Gemini, so I go both ways.
There you go. I got a Gemini daughter. But as I think about disruptors, they're the reason we have, the new creativity that we have. I mean, they make, the pioneers of our businesses. So if I can ask you to think about today and what's a bit different in the real estate business today than when you started? Just a couple of broad touch points for us as we frame today's conversation.
Information access. I mean, in the day you had a black sky that was that thick, and if you wanted to look up where vacancy rates were or what rental rates were, you sat there in a catalog on your desk. I was called the librarian, so I was the guy in the firm that had something from everywhere around the world. I could tell you oil prices, I could tell you the St. Louis Fed M2, I could tell you anything. And I just decided I wanted that information, that knowledge, but it was in a cabinet, literally. And they would always come to me and ask me, what's going on with steel prices? They'd say, okay, well, here's the data from the latest, whatever. Today, it's instantaneous. It's at your fingertips. It's a golden age like none other. And the future is actually incredibly bright if we don't kill ourselves first. We are living in the golden age of knowledge. We will double our knowledge in the next 10 years.
And access to that knowledge.
And access
to
and
make better
applicability
decisions
of that knowledge. And the second major megatrend, if you will, or current, is that this entire supply chain has been finally disrupted. 75, 80 years of, since literally World War I, of building materials and processes are finally getting disrupted thanks to the green movement. So you now have the ability to innovate and find products and materials that are so substantially, demonstrably higher performance, lower energy intake output, that it's transforming your ability to do things. We're able to design things we never could before. We were told by our architect to meet Title 24. In the state of California, the government wants you to work in a cinder block building filled with R55 insulation with no windows. But people want to work in environments that are visually connected to the outdoors. And that will not change, in our opinion. The glass building is the single least efficient structure. It was designed actually in the World Fair for just after World War II. And it is horrendous in terms of its energy footprint. It lets in light, which creates a heat effect. It greenhouse, it has all kinds of, and it has no insulating value, glass. So we spent 4 years, for example, chasing around the world, and the technologies that are exploding today will blow your mind. And we ended up with probably what will be the last full floor-to-ceiling glass building in Los Angeles. It's triple pane, double air gap glass, and the first ever used in North America, Swiss glass, which is triple pane and has laminated screen mesh in between it. All this to kick up the energy efficiency. All this didn't exist just years ago.
So I love your passion on this. So I heard the 2 I's so far: information access and innovation as a disruptor, right? So is there a third that you would share in terms of the differences today versus when you got in the business that have changed the way you operate your business model?
Yeah, I think it has to be the capital markets. There's so much deeper.
Access to public and private liquidity of predictable capital.
Absolutely, yes. Notwithstanding all the upheavals, every time the financial system comes back, more robust, more liquid, more transparent, more sources.
And real estate has become a suitable alternative with predictability of outcomes, which allow more capital to flow to that space.
That's right.
I couldn't agree with you more.
Yep.
So let's turn to, few of us have had opportunities to work for icons. So Rob McGuire is absolutely an icon of real estate development in West LA and Los Angeles. Mm-hmm. So what takeaways did you get from that stewardship, that mentorship, that guidepost as a young as a young person.
Yeah, very fortunate. Yeah. I affectionately called him the Viking because the helmet came off, the blood was in it, and he drank it, and there was only one speed, it was fast, and there was only one direction, it was forward. And he was just indefatigable. And what you learned from him was markets more than anything. He had a visceral, fundamental belief in that markets aren't linear, and they don't. When the Lotus spreadsheet, now Excel, was invented, and everybody put the 3% growth on, he thought it was the dumbest thing he'd ever seen. So he'd look at markets and say, "I think it's going to be up 20% this year," and lo and behold, he'd be right. And why? Because of his own dyslexic math that he would do, and he combined that with a passion for design and quality environments. That he was a Don Quixote. He tilted windmills. Fortunately, he had a good crew around him, because if he didn't have that, he would have gone upside down more than the twice that he did go upside down. But
so that in its own right was an interesting experience to see that volatility of financial stability.
Our first thing we decided when we left McGuire was to take all the good and leave all the bad.
Sure.
And we did do that. And for 25 years, we've been stable and not lived through the either the same spike upward or the same travails downward that he did. So I learned from him on that as well.
Yeah.
What not to do as much what to do. But he was absolutely exceptional in his vision, and his drive and determination was probably the thing that was most impactful.
So Edward, there's a McCarthy in McCarthy Cook. Mm-hmm. Phenomenal story about a partnership that has lasted for a long time. Still a great partnership today. Tom started working with you at McGuire, is that correct?
I actually interviewed with him as a financial analyst when he was CFO of Cheryl Kersey's Trans-Pacific Development.
Oh, there's a name.
And he didn't hire me.
Oh, my gosh.
And I'm thankful, because I ended up at McGuire Thomas, and then less than a year later, he ended up at McGuire Thomas and walked down the hall and saw me in the office and said, "What are you doing here?" And he said, "Well, of course you're here." And that struck up a great friendship and working relationship for 10 years at McGuire.
I did not know this story.
Years. Yeah.
So what is McCarthy Cook?
So McCarthy Cook is a vertically integrated real estate operating company with the sole mission of being a disciplined investor, first and foremost. But we bolt on as we affectionately say, we do the real things with real estate. We entitle, we develop, we construction manage, we lease, we property manage. We do we're visioneers and executioners of real estate business plans.
You do a lot of retrofits too?
What's that?
Retrofits, renovations?
Yeah, of course, yes. And we do it with, we've done it for 25 years without discretion and with the best financial partners in the world: Blackstone, Morgan Stanley, JP Morgan.
So I want to slow down for a second when you said without discretion, because for some folks listening, they might not know what that means.
Yes.
The capital that you've always used to do your visionary real estate investing has been at the discretion of somebody else as an investment advisor. Is that fair?
That's right. We are co-investors in all deals, but what we do is we vision an asset and a future play, and then we bring along the best partner for that in a relationship approach from underwriting day one to day Z. And if we're successful. If we're not, we move on to the next deal. And that has resulted in tremendous long-term relationships with these capital partners.
I want to just go back to that, because it's one of the differences today than when we all started in the business, is this access to capital and this capital partner relationships. You mentioned some of the biggest names: Blackstone, JP Morgan, Northwood. Who did I miss?
Morgan Stanley,
Prudential. Okay.
Northwestern Mutual.
So these people partner with you. They provide the equity and the debt, or just the equity?
Equity. We've never had a debt and equity, but we have bought unlevered.
And what kind of rights do they have over you, and how does the relationship work?
Yeah. So we are always the managing partner of a partnership, as the visionaries and executioners of the business plan. But there are many rights that are held by our institutional partners, and we live very comfortably. At times, we view ourselves as almost suckerfish on the shark, And we have all the capability and the capacities of our institutional partners, but we bring all the entrepreneurship and the zeal and the problem solving of our entrepreneurial venture.
So I might characterize it an ideal partnership. They outsource the real estate operations, the finding of real estate, the running of real estate. You outsource the raising of capital. And in that regard, you align well together under a partnership.
Yes.
That's excellent. And what does the company own today? Tell us a little bit about the assets.
Yeah, we own about 4 million feet. So we own a 1 million square foot asset in San Francisco called China Basin that we've owned for 20 plus years. We're just opening a one-of-a-kind asset in West LA, 600,000 feet of transformative post-COVID office. We can talk about a little later, I'm sure. We own 850,000 feet in Orange County. We have a 400,000 foot life science development in San Diego. And back up in San Francisco, we are a novel 250,000 square foot life science building that we are the only private sector landlord on the UCSF campus with the Sandler Neurosciences Institute. So we are office and life science principally today are the two main areas of our focus.
So, Edward, I can't think of a more ideal guest to have on than yourself in regards to your focus and your passion and your experiences with the office space. We look back to, I often share with people, did the pandemic cause the challenges with office, or was that transformation of office already in place and the pandemic just expedited it? But a lot of people want to write off office. When I was in the business back in the 90s, I recall it was the 3 C's that were going to be the demise of the CBD office: crime, commute, and communication, and everything was going to be a suburban office. And we all know that what happened with that projection. Yes. It didn't come to reality. So is office just going to need to change? It is changing, it should change, or should we be writing off and short selling office?
Let's go back to Mr. Inverse. So we launched Mr. Inverse.
Okay, good.
Arthur Anderson, $2,500 an hour consultant, who was my favorite friend.
Okay.
And chief protagonist. Remember, he said, office buildings are dodo birds. You might as well be making buggy whips. And our first instinct was that he's absolutely wrong, because it's the knowledge factory of the future. And it turned out we were exactly right. We went out and bought as many office buildings as we could. We bought $1 billion worth with Blackstone from 94 to around 2001 or 1999. And he was wrong, because when the dot-commers all coalesced, beside raising lots of money and on these fictitious business plans, the first thing they did was go out and get more office space than they needed, and for the pool halls and all the rest of the things. And so we made a killing buying office buildings at $100 a foot and selling them for $200-300 a foot that you couldn't replace for $400 to $500 a foot. Roll the cameras forward to today. I don't know why, the old adage, the more things change, the more they stay the same, still resonates in my conscience and in my intuition, but this is different. Realistically, we had a series of buildings in the 1980s that were built on poor business plans, horribly funded, 100% construction finance.
So bad capital stacks.
Bad capital stack. Developer specials that never should have been executed, because they were just get the building up. It's an office building, so it's going to trade. This is 1980s to early 1990s. It's going to trade and we'll make money. And those buildings today are echoing and are literally functionally and economically obsolete. And there is a broad swath of those. I would say it's somewhere 10 to 20% of the entire office stock.
So is this B's and C's, predominantly C's now?
It can be A's, what could be known as A's. It could be a building that has a substandard window line, or a complexion in the wrong location that's moved away from the center of gravity for whether it's transit or amenities, that leave it just orphaned.
You can't change its location.
You can't change it. So it is different today, and office is going to be under tremendous stress. And I wouldn't say the same thing to Mr. Inverse as I would today. But I also feel like I believe we turned a corner in the summer, this last summer, with at least the impetus to come back to work from all the thought leaders that are out there. The thing that's keeping people from work, and America is less occupied as a whole than any other industrialized country. And California in particular is less occupied than any other place in the United States. And I think it has a lot to do with one of the C's you said, which is commute. So we have generally high traffic, heavy commutes in California, and so we also have a more entrepreneurial culture, and I think people have just nestled in their homes, and we're seeing 25, low 20s to mid 20s return to work rates to the office when other parts of the country are at 50% on average, and Europe's over 60%.
Yeah, I mean, you'll correct me, but I understand Japan is in the 90s. So I'm wondering if this is cultural. Is that an imperialistic, country, and they just mandate and dictate, their office workers to return?
Yes.
So maybe that too will happen here at some point as leaders of companies choose to have their employees back in the office, and the employee doesn't have the leverage they maybe once had.
That's right.
There's
no way with a great organization, unless you are a gamer or a programmer that can be in a dark room and always wants their headset on and doesn't need to talk to anybody, that organizations will wilt and will not thrive and survive. That's why you have the JP Morgans coming out with the statements that they're making, and others that are saying you've got to come back to work, and you will. But they're going to come back to a different workplace. And so LA, for example, is a great, and our project up there is a great barometer for this. So we opened literally months ago. So this project in LA has an acre and a half of outdoor event space, has the largest assemblage space, outdoor assembly space in LA, private. 2,300 people can caucus in this amazing integrated indoor-outdoor, what we call a Japanese-inspired rooftop beer garden, with event lawn and campus cabanas and a conference building that articulates with 270 degrees of glass, and roll and pour taps, and a beer garden and exhibition kitchen with pizza ovens and all this. And so what you see is we're probably the only leases going on in Los Angeles right now. Los Angeles is one of the most difficult markets in the country, San Francisco as well. And we're seeing leasing because the project is what I am now the HR department for the companies of the future that want their people back into their culture and to be building their collaborative work culture and productivity back. And they're asking me all the things you can do. I'm their HR department. So I tour around CEOs and say, well, here's pickleball over here. Here's your basketball court. Here's your campus cabanas. So when Tom Cruise wants 3 p.m., charcuterie board, and rosé wine in cabana number 3, it's done because there's a whole food and beverage ecosystem that anchors this whole project. 600,000 feet of what we call light-infused workspace, because it's lumen, because I told you before, we spent 4 years yelling at Gensler in this case that we're not putting ceramic frit on the exterior of the building, so we're looking outside of a snow cone. We're going to Germany, we're finding this ultra-high performance glass and putting the first ever triple pane double air gap, which means you have a pane of glass, you have an air gap, you have another pane of glass, you have an air gap and another pane of glass. The IGU, the glazing unit, weighs 60 pounds a foot. It's massive. And this building now leases from the inside out and the outside in, and is connected to the outdoors, and it has this ecosystem together with, by the way, 5 per 1,000 parking, 5 spaces per 1,000 square feet. At the same time, we're also the first project to offer private transit to public transit, and we're the first Tesla supercharger in a private office building in California.
So Edward, I love the passion. I'm sold. I'm envisioning you as their HR director and getting them excited about why they want to be in this phenomenal work environment, this extraordinary building that's thought through every element of its existence. But when that decision maker for that tenant says, my tenants want to have flexibility to work from home.
Yep.
I mean, I think we'd have to just accept the reality that there needs to be more customization of work schedules and allowance for. So how does that change a landlord and a capital partner's perspective about this income stream and how they look at their investment together?
Well, first, on the work side of it, you would think everything would have changed, and for example, they would never go back to the dense work environment that they were. Interestingly, we're seeing that in some cases, not in all cases, but in some cases.
You're seeing them go back?
Yes.
Okay.
So, for example, we're one relatively large tenant, international corporation, looking at the building, planned space to a degree I've never heard before, 20 per thousand, meaning 20 people per 1,000 square feet. Right? That's 50 square feet a person. So it's basically, you and I in this little
Which, when you and I grew up
here.
in the business, it was maybe 200 feet per person.
250 feet per person.
250 per person, okay.
250.
So tight, dense.
Because they want to be able to get everybody in the smallest amount of space. So it's expensive space, so they can take the smallest footprint, but they want that calling card to say, when you come to work, this is the energized environment you're going to be in. But so we're seeing that, and on the other hand, we're seeing a little more luxurious in some cases where they're spreading out. We're seeing everything under the sun, but we're not seeing hermetically sealed work environments. You have to be every 6 or 10 feet apart and back to all private offices or back to all benching.
Yeah, and my comments weren't so much an avoidance of the germ in the
know,
redesign. It was more about a lifestyle flexibility that some people
Yes.
believe they're actually more productive from home.
Yes, and there's a case for that. And we are seeing most businesses look at between a Monday and a Friday optional day. But some businesses are working against that as we speak. I keep waiting for the first major loss of data, major breach of corporate intelligence to happen with somebody. If I was China, I'd be sending all the spies over here in living rooms across America for people working to 16 ways to Sunday steal all of our information. Companies are going to have to go back to some level of security. But to your point, yes, we are seeing that. And so they're staggering work weeks and they're giving flexibility, but they know they have to get people back to work to build. Because in particular, what I'm seeing is young people, and we track young people, and we're watching the stories, and it would be everything you're thinking of. The young person who shows up to the office is getting the promotion and getting the next job, and the person who's sitting in, pick your place, Park City or Tahoe, is getting left behind.
So there might be a differentiated workforce by choice.
Yes.
Those that want to get ahead and maybe be at a different level within an organization might look for the full-time employment.
Absolutely.
So the customization of the tenant.
Yeah.
So in an optimistic way, because you're an optimist, I would almost say that this is a chance for those survivors in office to evolve and to develop that true mass customization of their product line.
That's right.
To allow for this type of flexibility.
So we don't talk about the words creative office. We use the word, and we pretty much coined it. We actually put an R or a T on it to try to, but it's not legally permissible, but we're claiming it because it was first spoken here. Experiential office, and what does that mean? That means a workplace that has all the amenities you can possibly think of. We have another trademark called Make Time for the Weekend. So what we're trying to do is create work environments where we can do every single thing under the sun we can think of to make your work environment productive, to give you more time for the weekend. So we can change tires, we can fill up your car, we can wash your car, we have the only shoe shine in town. There's 1,000 things. We have grow gardens, we have take-home meals, you name it. All these things you can do, dry cleaning to maximize. These are things that were, in the last couple of cycles, but we're trying to maximize time for the weekend. We're trying to create experiential work environments where we infuse them with human-run amenities. So it means that we have a chef that's taking real vegetables from a grow garden and cooking them in the cafe, and that we are delivering actually vegetables to our tenants that are grown right in the project, that make this workplace someplace that we, interestingly, when we created these in the last 5-7 years, we actually for the first time see people bring their kids to work. They might be after school and the father or mother has to work another couple hours and they're playing around and they're eating oranges in the grove or doing those kind of things.
This is very insightful as you're bringing to life a positive element of this evolution of office, which I think, optimists and business people want to hear. So I appreciate you kind of sharing that. So as I think about new investments and your investment partners, I'm a capital markets, born and bred kind of individual. So I think about what that equity might want from you. Are they listening? Are they signing up? Are they in agreement with this evolution of office as you've described it? And in turn, can there be opportunities for you to maybe take advantage of this transformation of the survivors and the non-survivors in office as you look at making new investments?
Yeah, good question. So remember, I'm a Gemini, so
right.
I'm a brutal realist on the one hand, and I'm an absolute inveterate optimist on the other. Brutal truth today. There's an office building that is going to go, vertical in America today.
So just to be clear for our listeners, you're saying no new construction of office, nothing going vertical because capital just won't sign up, be it debt or equity.
That's correct.
Okay.
Yeah. And I think we have a supply shock, but in a totally different, novel way than we've ever seen in the country. The supply shock from the RTC and the SNLs overbuilding, or in the late 90s, in the dot-com boom, is totally different than today, because the supply shock is that you now have evaporated something like 20-25% of all demand for office because of this hybrid choice and downsizing. Law firms in particular being large-scale users. 40% on average is the reduction in the footprint of law offices around the country. So I don't think you're going to see, we're not likely to be out there arguing to go ground up on a lot of office, and that's where our other side of our business has been our focus for many years, and in particular now, life science.
So I want to talk, as we kind of move to wrapping this a little bit. I could go on with you because this is so informative, and I love your vision and what you've done with your own business. I want to understand a little bit about the favorite part of the job for you. So I want to kind of bring you back to as we started. I mean, this is by all definition a very tough time in our business, broadly, without specificity. So what's the most favorite thing you're doing today? What do you enjoy most about your job, even though it may be a tougher time in the environment?
Every single day is different. So we affectionately think of ourselves as the point of the sword. So
the point of the sword.
Point of the sword.
Okay.
We're working with architects. We're working on refining business plans and operating models and graphics and marketing and working on finance, and every day is a new challenge and a new opportunity. And notwithstanding how difficult it is today, we've been blessed with several market cycles, including the inaugural one that launched our business in 1995, which in that day, in that time, I'll never forget that same consultant who basically looked at me, having just graduated from Wharton with my MBA, and basically said I was worthless. He said that to my face, that I was of no use to society. And that's why he became Mr. 1/X to me, and a great motivator. You are going to see tremendous opportunities out of this.
You will see opportunities.
You will, absolutely.
Yes.
I would love to see and say that of the 15 to 25% of office buildings in America that are functionally and economically obsolete, that you can convert them into the next coral reef of living opportunity. For example, we don't have enough housing in America. Boom, these structures are built. They're already sealed and operational, but sadly, and we studied it in great detail, it's very, very difficult.
Some work better than others. Most don't work.
It might be 5%, 3%, 2%.
Sure.
It's less than double-digit percent of buildings that could be rationally converted unless we radically rethink our living models as well, which we might have to do and we might want to do. the government has to change its, and it is in places. The only way it's going to work, buildings will have to be given for free with a government subsidy. And the third element is they're going to have to change completely their zoning and their building regulations. So for example, you could house people very effectively. And a lot of people are currently housed in New York in windowless basements because that's all they can afford. And every young person wants to be in New York today. New York is happening because, why? Because they're back to work. So the leaders, the young thought leaders, the young energetic people in this country are flocking to New York. Rents are off the charts for low-end apartments. You can't get one. They fly off the shelf as soon as they come available because they want to be there in the ecosystem where there are young, vibrant, social interactions all day. And they're not flocking to San Francisco.
A podcast opportunity for another time, which is really the highest and best use of some office going forward.
Yep.
The evolution, the adaptive reuse. We see it in medical office.
Yep.
And just some great locations, some great sites. But we'll save that for another day, but you've touched it, and I think it's great. I want to ask you two last questions. You and I met as I was pitching you to join an organization which we're now both members and that called YPO. So I often talk to people about working in the business, working on the business. So some of the things I enjoy most in my career as I look back is things that I worked on the business where you can take a break away from it to reflect upon what other things might be going on. So what is YPO? What has it done for you? And how do you describe it to folks?
Oh, wow. Yeah, it's been extraordinary. I'm all about learning. I'm a knowledge
Young Presidents.
person. Yep. Young Presidents Organization is just an extraordinary lifelong learning opportunity, and expanded by however many minds we have, expanded by however many contacts they have, is just been an extraordinary learning opportunity for me. And
Well, now you're the leader of our particular chapter, which is wonderful to see you at work. I always say making better leaders through idea exchange and lifelong learning. And I just know it's now a passion of yours. It was a passion before, but it's just great to see that experience influence you like it has and to see you lead. There's a lot of lifelong learners on our listening group today, and I think it would be a great end if you could just share with the younger people some ideas, some contributions, some thoughts, some recommendations as they look at their business career and their life going forward. Things that you might replay or just affirm that works so well for you.
I have 3 relationships that go between 25 and 35 years back to college. I have relationships with 3 professors, one whom I have brunch with 2 times a year. And so I'm still learning, and they're learning from me, and I'm learning from them. Extraordinary minds, once in a lifetime minds. So I really encourage young people to, not many people think about their colleges and keeping that in their life, but I have kept it in my life since both undergraduate and graduate school. YPO has given exposure to broad learning that I just eat up, and it's what informs the innovation as well, because I'm constantly picking ideas. When you think about whether it's an office environment or a life science environment where we're trying to create the discoveries of the future, it's all about infusing that environment with things of the future and as it evolves. So I would say that staying focused on never, getting complacent and never saying that good enough is what kind of drives me.
A great takeaway and a great wrap. I hope you all have enjoyed this as much as I have. Edward Cook is a great thought leader, and I think you got a good sense for that in our session today. So I hope you all had some good learning here on Counting Capital. We look forward to seeing you next month. Thank you very much.
Thank you for joining us on this episode of the Counting Capital podcast. To learn more about Buchanan Street Partners, please visit our website at buchananstreet.com. Buchanan Street Partners, capital you can count on.